Indigo's profits take a one-off hit on December disruptions, even as the core business shows signs of resilience. Shares of the airline skid in early trade, down 2%.
Bandhan Bank delivers a stable performance in the December quarter, reporting a slight uptick in the net interest margins. The stock is up close to 5% as brokerages Motilal Oswal and CLSA issue bullish calls.
Robust earnings provide a leg up for APL Apollo. Margins expand, EBITDA per ton grows over 20%. The company is looking to double its capacity by FY30.
Splendid moves from Hope First Finance following a good show in the quarter gone by. A strong all-round performance was aided by a 60 basis point uptick in margins. Return ratios also improve.
Tanla platform skyrockets on the back of strong third quarter results. Margins expand while profits grow 11%, aided by strong top-line growth across segments.
Hello and welcome to Chartbusters. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Mangalam and a slight tinge of green on the top of the screen. So thanking God for small mercies, Mangalam. Another show we start with some green. It's a Friday. I'm sure you're going to be smashing it out of the park because it's the long weekend as well. But let's hope we end on a stable wicket.
Let's hope we end on a stable wicket. Long weekend, Nigel, but you know, it's also the weekend for Lollapalooza, which we'll be watching a lot of those music grooves and all of that and stuff. And tonight, if you like house music, Nigel, there's DJ Tiesto who plays. You've probably heard of DJ Tiesto. I'm not sure, but as we speak, you know, the Nifty is just flitting.
You're getting me passes for either of those two?
You come along with me. You're my plus one. I'll just tell Sonal that.
Lola, okay.
Oh, okay. All right. On that note, what we'll do is...
He's saying, but he's already promised to take me. Okay, I'll read
it. A perfect time, actually, to get speaking to the management of Radico Khaitan. Abhishek Khaitan, who joins in now after, what was a stellar quarter for the company. Yesterday, the stock ended about 6% higher as well. And good volume growth, much ahead of peers. Thanks a lot for joining in, Mr. Khaitan. As we say it in your business, cheers, right? A stellar set, much ahead of peers. So, for starters, can you detail what is it that you did differently for volume growth? I mean, what's a sustainable run rate here?
So, Mangalam, first of all, wishing you and all the viewers a very, very happy New Year. We always believe October to December is the festival period of India. And luckily for Radico, it has been truly a good quarter. In fact, it is the strongest quarter ever. So we had a volume growth of 16.7%, and we did the highest ever volume of 9.75 million cases. And also we had the highest ever EBITDA of 265 crores, which is a jump of 45% in EBITDA. Corresponding to the same quarter last year. Our net profit also grew by 61% to 154 crores. So in fact, what we saw, and most importantly, is our P&A category grew by 25%, which we are happiest about. So the hard work, what we have been doing the last 4, 5, 6, 7 years has started playing, and the premium brands have started now gaining pace for us. And the growth, what we are getting from all across India. So every state is contributing to the growth. And for us, like our P&A brands like Magic Moment Vodka, which is the largest selling vodka of the country and the 6th largest in the world, has grown by 18% in the current quarter. After Dark whiskey has grown by 40%, and Royal Ranthambore has grown by 50% in the quarter. So overall, we have seen growth everywhere.
All right. Hi, Abhishek. Good to see you. Well, let's focus on your volumes. Now, the 9-month volumes are more than 40%. I think that's nearly double of what you were guiding for earlier when we were talking about more than 20%. What would you update, your guidance currently? Do you think you can do even better?
As far as the growth goes, I think in the fourth quarter, we should end the year at a volume growth of about close to about 20 to 25% in terms of volume. And going forward, our focus is more on the P&A category, where we expect our P&A category to grow by 15% for the next 2 to 3 years. So I think that is where our focus is. And as far as the luxury portfolio goes, I think it is doing extremely well and will be close to our 500 target.
Okay, what about your luxury portfolio then? That 500 crores, you're on track this year itself?
See, that we will because if you see in the last 5 years, we have done a lot. We have launched 6 luxury brands, starting from Royal Ranthambore to Sangam to Rampur Barrel Brush, the Spirit of Kashmir Vodka, Kohinoor Rum, and our latest Virasat Indian Single Malt. So I think the luxury portfolio has a long way to grow. And I think it should grow by about 30%, 30 to 35%.
All right. So luxury growing over 30 to 35%. What about margins then? Because, raw materials are favorable right now for you. You are premiumizing. You will also have to perhaps, increase your spends at some point in time. Your margins have increased. Will you settle at, this 200 basis points increase this year? And what's the outlook for next year?
Mangalam, our margin, if you see, last year we ended at 13.8 and we had guided about 150 basis point. But in the current quarter, our margin is 17.2 and for the 9 months, it is 16.2. As far as I see the fourth quarter going, we expect the margin to be same as this quarter, if not better. And going forward, we expect about 125 basis point increase in further margin if the raw material stays where it is.
Abhishek, cheers all the way. You're sounding very, very optimistic. Now you've repaid close to 200 crores of debt. When you make good amount of money, obviously your debt levels become more comfortable. Will it stabilize at current levels or are you due to be debt-free soon?
See, the company is throwing a lot of cash. So I think debt is least of our concern because our internal working capital would be about more than 1,000 crores. So I think debt is least of our worries. So FY27, I think we'll be debt-free.
All right, you will be debt-free by FY27, least of your concerns. But something that's concerning the environment right now is the regulations, right? Ahead of the budget, are there any risks that you foresee, especially given the recent crackdown that took place on tobacco?
I think everything in moderation is good. And I think I don't see our industry facing that pressure because we are one of the highest contributors to any of the state government. And we've always seen wherever there's been prohibition, there's been always a backlash. So I think our industry is quite responsible. And as far as it has to be, I think we don't see it as a worry.
Oh, interesting. But then what's the next macro trend as per you?
See, I think the white spirits, which I've been always saying that, globally it is 28%. In India, it is only 4%. We are seeing a lot of traction in the white spirit space where Radico is a leader in vodka, in our gin, Jaisalmer. Indian craft gin has a market share of more than 50%. So I think going forward, I think white spirits is going to gather a lot of momentum.
All right, white spirits going to gather a lot of momentum, Mr. Khaitan. Unfortunately, I'm not the ideal consumer for your product. In fact, you've also in the past said that you're not looking to launch any of the zero alcohol beverages. But whites, Nigel, what are your thoughts on whites? He says globally whites are 28%, in India it's just 4 to 5%. Whites are gin, white rum and vodka. What's your poison of choice?
Gin. I would go with gin actually.
Tequila?
Nice. Tequila as well. Very good. Yeah, and low calories, Mangalam.
Yeah,
so if
low calories.
If you ever choose to come onto this side of it, then you can maybe, in fact, go.
And if you choose to come on this side of it, there's just so yeah, there is one of that. or just so plain soda. Plain soda.
Just come on this side. You're wasting time.
Well, we'll decide that. We'll take a short break. But on the other side, we discuss jewelry after alcohol. Bluestone Jewelers founder CEO Gaurav Singh Kushwaha joins in after the break. Well, ahead of the long weekend, virtually undecided for the market, flitting between red and green. But one stock which is off the highs, significantly off the highs, down about 9% from highs, is Bluestone Jewelry, down 3%. Remember, the numbers were good. Ahead of numbers yesterday, the stock had already run about 11%. And maybe the stock sold off for three particular reasons post their numbers. One, as compared to the reported growth in peers like Candere and Carrot Lane, the growth of 27.5% was slightly lower. Second part is that there was a large element of inventory gain, which has led the EBITDA to be higher. And the final part is that the stock had already seen an 11% up move ahead of numbers yesterday. That explains this sort of move in an otherwise good performance coming in for Bluestone Jewelry. Gaurav Singh Kushwaha, who's the founder and CEO, joins in now. Thanks a lot, Gaurav, for joining in. Congratulations. The revenue growth was good, EBITDA even better. But what I want to understand is, what's the current unhedged inventory that you're sitting on, and what are the likely gains in fourth quarter because of that? Because between the third quarter and now, there's been a serious jump in both gold and silver prices.
Thanks, Mangalam, for having me. So essentially, what we have always maintained that our inventory, our hedge ratio are always going to be in the ratio of our equity to debt to kind of protect the balance sheet. In line with that, we maintain hedge at almost 50%. However, another thing to note is that every company, every jewelry company, whether you're hedged or whether you're unhedged, you always have inventory gains. We are the only ones who actually disclose it separately. But even when you're hedged, which means that you're short in futures market, at every rollover, you actually end up making money. In fact, in last 1 year, any company that has 100% hedged position on their inventory would have made almost 5 to 6% on that, which is generally bundled in gross margins. We are the only ones who separate it out. Now, given the sharp rise in gold price, we have unrealized inventory gains still sitting on our books and which are going to be unlocked in next few quarters.
Which is what we want to understand the quantum of, sir.
Quantum, actually, it's a pretty, so quantum I can't disclose. We don't disclose that. 50-50 is the hedge ratio that we do.
Okay. All right. Hi, Gaurav. On a personal note, I was wanting to gift both the ladies in my home, wife as well as daughter, something, and I went and gave a little token of gold, but it should have been silver. They would have been much happier. That said, as a percentage of your sales, how much is silver, if you could tell us out there? And there would be big inventory gains there too, right?
We don't deal with silver. We only have gold, diamond, platinum. We don't deal with silver.
So thank you for the clarity then, because that was one of the queries that did come in. Will you be...
So the way we should look at the business is beyond inventory gains, and I understand inventory gains is no one's hand. It's our, at the same time, protecting the balance sheet is very important, and that's why the hedging policy that we have. I think more important is the EBITDA that we have delivered, which we disclosed, pre-Ind AS EBITDA without inventory gains that we disclosed.
Got it. So what is a sustainable number then there? Because you said when you came for the IPO that a large part of your investments are front-loaded, older stores make 24% EBITDA, and as newer stores get older, you will get the benefit of operating leverage. So on a sustainable basis, what is the EBITDA likely to be?
Precisely. So last full year, that EBITDA, which was pre-Ind AS EBITDA, which adjusts for ESOPs, rental and inventory gains, that EBITDA was 1% last year. In first half of this year, we delivered close to 2 to 3%, and this quarter we delivered 12%. Fully should be significantly ahead of last year.
Okay, so 12 to 15% is a sustainable number.
12% festive, but in Q4 it will drop. But eventually we see our business as, because we operate in high margin categories, so we see our EBITDA to be in kind of mid-teens or from between 13 to 15%.
Okay, all right. So,
at maturity.
Okay, all right, Gaurav, will you be impacted by Titan's foray into the affordable jewelry segment?
Titan had always been there through Mia, through Carrot Lane and so on. So and Titan's or Tanishq's own portfolio also contains a lot of those products. So it's not that it's something new, that has always been there. So that competition has always been there, and our growth has generally been, I mean, we have been eating significant market share.
Since you spoke about
dynamics.
Carrot Lane, market share as well. So tell us that those competitors appear to be growing at a faster pace than you, right? So according to you, what is your current market share, and have you lost or won?
I wouldn't say so. So the industry is slightly complicated. So you actually have to look at, so most of the other peers, they actually have both primary and secondary sale, which means the sale to franchise is also disclosed as company sale. So for example, if you look at Carrot Lane's last year results also, their reported sale was 32%, but the end customer, their reported sales growth for Q2 was 32%, but the end customer sale growth was only 25%, which was 7 percentage points lesser than that. So I think to that extent, it's very difficult to just compare the headline numbers. And I think it would be wise to actually look for the consumer sales, the growth in actual consumer sales.
We don't have access to the consumer sales data. If you could, Gaurav, then tell us, on a reported basis, you've done about 27.5% sales in the third quarter. Reported basis, CaratLane has done 42%. Candere has done, obviously, on a very low base, 147%. Have you, in the third quarter, gained or lost market share?
See, Candere is very difficult to assess because Candere also is within Kalyan stores, right? So if some piece is sold, and that happens to be a Kalyan piece, like how Mia and Tanish used to operate, where Mia would sell within Tanish stores, right? So it's very difficult to kind of get hold of what is Candere's retail sales force. Another dynamics which plays in such volatile gold markets is that the demand for commodity products, which is coins, chains, low margin bangles, etc., increases disproportionately. So it all depends on who is playing in what segments. We generally play in higher margin segments. We don't have a very strong play historically in lower margin categories. I think there are lots of dynamics, and hence looking at just one quarter when the gold was very volatile, just comparing those growth numbers to assess which company is going faster or slower, I think would be the wrong thing to do.
All right.
So if you look at any of the quarters before that, quarter two, quarter one, and so on,
right,
it has always been strong.
So on that note, let's wrap this conversation with some
also. Yeah. And in December also. So we exited December at around 35%. So as things moderated, as more sanity prevails in gold prices, I think it would be much easier, or it would be a much better environment to predict which company is growing faster. Right.
Okay, irrespective of where gold prices are, that's not under your control. And obviously what the competitors do isn't under your control as well. Let's wrap this conversation with three very simple numbers, all right? Going forward over the next couple of years, what is the kind of sustainable revenue growth that you foresee backed by same-store sales growth? That's one. The second part, you've already told us that you are eventually aspiring for mid-teen sort of margins, but ad spends as a percentage of sales. You have leverage there as well. It was 9% earlier, now it's down to about 7%. Where does that number settle? That's two. And the third part, the number of stores that you're going to open. So the number of stores that you open, under your control. Ad spends, under your control. Revenue backed by same-store sales growth, under your control. If you could give us all these three numbers.
Sure. So on growth projections, we maintain, so we've generally been growing at between 35 to 40%. So we maintain the same growth projections in that range, between 35 to 40%. Supported by the same store sales growth of between 15 to 20%. So we continue to kind of maintain those numbers. In terms of A&P, we always maintain that there's significant leverage sitting there as we grow more and more stores, and the stores mature. A&P as a percentage of overall sales was going to come down, and it has come down. We will maintain it at around 6%. I think this quarter was around that number. Going forward, we'll maintain it at that number. And the third, what was the third part? Third question?
Number of stores that you open. Currently, it's 275.
The store rollout. So 70 to 80 stores a year.
All right, take that point. Thank you so much. 70 to 80 stores every year. A&P is around 6%. Yes, go ahead.
As a very young brand, we are still significantly underpenetrated.
Yeah.
We started opening stores around 5-6 years back. So it's just a lot of scope of opening more stores.
All right, we take that point, Gaurav. Thank you so much for joining in, giving us an outlook, a peek into what the business is likely to be. We'll obviously touch base with you, sometime during the middle of the quarter to find out how the fourth quarter has been so far. The start has been good. You've said that you've seen mid-teen sort of SSSG and 35% exit run rate in December, which has continued into January as well. There was a big move on the stock yesterday. Currently seeing some profit booking. Take a short break. Come back. More news and updates for you.
Welcome back. Well, the markets have dipped mildly into the red. That's not the problem. The broader markets actually have seen some selling, but you'll still take it. You don't want this market to fall. The rupee as well is fairly stable in today's trading session. So by the end of today, if you have the Nifty model as flattish and the rupee stable, the bulls will take it after the kind of selling that we have seen. But we have completely run out of time on Chartbusters. You stay with us because the time of trading hour is waiting by.